Welcome back, everyone. My name is Ed, and this is the Soaring Dividend YouTube channel, where we're discussing dividends and other passive income investing. In today's episode, we're going to go over my favorite dividend stock right now in the technology sector, and that is Broadcom, ticker AVGO. We're going to go over a brief dividend analysis, talk about the dividend yield, the dividend CAGR, how it's compared to some of its competitors. We're going to go over what Broadcom truly is and what are some of its products. And then finally, we're going to talk about the cash flows of the company. Are they sustainable, and will they be there for us as investors to generate more and more dividend income long down the road? After all, this is all about you as the investor and generating more and more cash. Without further ado, let's head over there right now. All right, so before we go into the dividend analysis of what the company truly is like behind the books, we need to know what Broadcom is. All right, so Broadcom is an information technology company. All right, they're one of the leading in the industry. They're specifically a company in the semiconductor industry. If you don't know what semiconductors are, and not many people actually do, which is funny, they are basically these tiny little electronic devices and chips within your personal devices at home that help the flow of electricity within them. Some of your devices include smartphones, things like radios, your personal computer, and medical devices in hospitals. With the rise of technology, such as AI, autonomous driving, and virtual reality, semiconductors are becoming more crucial than ever. If you have hope that some of these booming industries, such as AI and virtual reality, will be the next big thing, then Broadcom and other large semiconductor companies, such as Taiwan Semiconductors or Qualcomm, may be an attractive investment for you right now. In addition to their semiconductors, Broadcom also offers infrastructure software platforms that connect big data with decision-making tools. As an analyst myself, I value these tools that Broadcom offers since they capture data seamlessly and then connect that data to a platform such as SAP, Salesforce, and Power BI. All right, next up, we're going to talk about the dividends of Broadcom. So let's go back up to the top here and navigate to the dividends tab. So if we scroll down the page, you'll see that Broadcom right now is at a dividend yield of 3.13%, which means that the company's annual payout is divided by their current share price. So 14.4 divided by the 46.7 gives you that dividend yield of 3.13%. Dividend yields of anywhere between 1.5% to 4% is a small to medium yield. Anything below 1.5% is a very low yield for me. But if it's a very prominent company and it's going to be there 50 years from now, low yields, who cares, right? But what I like to focus on with my investments is the 5-year growth rate or the 5-year dividend CAGR. This shows how much a dividend is going to grow over a 5-year time span. Broadcom's 5-year dividend growth rate is 50%. Let me repeat that, 50%. That is a ginormous growth rate. This is the largest growth rate I've ever seen in any company. All right. And their annual payout right now is at $14.40, and their payout ratio is about 50% right now, which means they have more and more room to grow in terms of giving us more capital back as shareholders. All right. Right now, they're at a current dividend growth of 10 years, which if you look back into the dividend history tab right here, you'll see that Broadcom really just took off 10 years ago. They went through a couple stock splits, and then they just climbed through the roof. As you see here, they increased their quarterly dividend from $3.25 to all the way up to $3.06 quarterly, all right? That's a huge leap, and Broadcom is a very, very attractive investment right now for me. If you look right here, you'll see that the share price has been fluctuating within the past 1 to 6 months. So if you're going to enter Broadcom, I would wait until a retracement of about $430 up to $445, $450-ish before you really get in. And that's just because there's a lot of fluctuations and uncertainty right now with the chip shortage that's happening around the world. All right. Companies aren't able to produce all the devices that they need because manufacturing from the COVID pandemic has just slowed everything down, okay? And companies like Broadcom, they're going to be the next big thing in my eye and something that you really want to look forward to, okay? So after a brief talk about their dividend, which looks fantastic as an investment, again, you want to see something with a low to mid yield and then an insanely great 5-year CAGR. That looks like a great company to be a part of. All right, so now we're going to take a quick look at their cash flow statements right now. All right, next we're going to take a quick look at Broadcom's cash flow statement. All right, so as you see here, their net income is at about $2.96 billion as of November 2020, which is about a $200 million increase from the year before, which is a good sign. Scroll down till you see the cash flow from operating activities. These are their normal day-to-day business practices, so selling their infrastructure software, selling their semiconductors to big companies such as Apple, all right? As you see, their cash from operations since October 2016, right here, has grown year after year after year up until November 2020, where it hit $12 billion, all right, in cash from operations. This right here, this 5-year snapshot, is a great sign for an investor because we see that people really want Broadcom's product, all right? If you look at similar companies like Qualcomm, this is not necessarily not necessarily the case because Qualcomm might have a different business model, even if it is in the same semiconductor industry. The last thing on the cash flow statement that I'll show you is that the free cash flow per share, this is something, if you see my other videos, this is something I love to look at as it really avoids any dilution that a company might add to their cash flow statement to try and trick investors. If you see this going up positive, then that is a great sign, all right? You see here back in October 2016, it's at $7.34. It increased every single year up until the current year, which is at $28.11. Free cash flow per share, that means the money is getting back in the investor's pocket, which us long-term and dividend investors love. This company is a great value and long-term play. I truly believe that in my eyes. However, do your own research on all of this. This is just a quick analysis of 2 things on the cash flow statement. You can still look at many more things on here. You can look at many more things on the balance sheet, the income statement. This is just a quick overview of the cash flow statement and some essential items to look at. All right, so that is it for the financial aspect of Broadcom. All right, keep in mind that the chip shortage is hindering the business a little bit. So their profit and net income aren't necessarily the highest as they could be right now. All right. And I want everyone to know I'm not a financial advisor. Okay. I do this just for fun and for entertainment purposes only. I love doing this and I want you to succeed as an investor and for myself to succeed as well. We can do this by doing a little bit extra research on every investment we make. I hope you enjoyed this video on Broadcom and the entire semiconductor industry as I see it booming way down the future. If you get anything out of this video, please leave me a giant thumbs up and consider subscribing if you haven't. Until then, the Soaring Dividend will see you next time.